Hey, what's up, everybody? How we doing? This is Rodrigo. I'm gonna be here with you today. In about like 7 minutes or so, we're gonna get this whole thing started. Okay, we're gonna go over a couple things in the trading school. All right, we decided to give you guys a sneak peek. All right, I decided to give you guys a sneak peek. I don't do this. We never do this, but for the first time, we're gonna give you guys a full 180. I don't know if it's 180 degree, a full degree, a full review of the trading school. And we're going to go over everything inside the school. We're going to listen to Mark, some of the classes that we've talked about there. We're going to go over some things in pro, which is included in the trading school. And who knows, maybe I can convince Mark to come here once he's done with that class he's got there. So if that's the case, he'll be here. So, but yeah, guys, just wanted to give you a quick shout out of what we're going to be doing here. We will be talking about some things here as far as like the school, right? The schedules, what we're doing there, day in, day out, you know, how we do that together as a community. I'm going to show you how it works. And you can feel free to ask questions. We're going to go over some charts as well in the pro platform, which is part of the school again. And I'll let you in on a trade that I made today. I think it's like 48%. I was literally in the market for like 3 hours in the morning, in and out. And tomorrow I'll get back into school and I'll see what Mark is talking about, what the class is talking about. But yeah, guys, just a heads up, 6 minutes, we're going to get this whole thing started. What's going on? Jesse Lang, Esther Jacobs, Charles Golda on the YouTube chat. Guys, we're going to be starting here in a little bit. All right, so just please give me a little patience here so we can all get this together. I'm trying to get Mark on the phone. Maybe we can get him here as a special guest. But just feel free to put any questions in the chat, guys. We're going to be talking about the school and we're going to do the live preview of what the market does as soon as that Powell, as soon as Powell speaks. And we'll be here for a little while, just going over the school, guys. So we'll see you guys in a little bit here. All right, all right. Let's get this going. Everybody, welcome. We're going to start here a little bit earlier today. We're going to catch Mark in the class. So let me set this thing up. Welcome, everybody. Today, we're going to be here for a little time talking about the trading school, how it works, how you can use it to benefit in these times, how I used it today to make a really nice trade. I'll tell you later about it, but let's just, let's get this thing going here. Let me start sharing the screen. All right, folks, let me know if everybody can see that chart right now in Pro. I'm basically showing the cues right now. All right. So we're going to go ahead and show you guys what Mark is doing right now. We have a live class in the trading school. Let's see if I remember this. So we have a live class here in the school, and we're going to go over that shortly here in a bit. Let me log out. I think I know why this is. Hmm. There we go. That freaked me out there. All right, so yeah, that is my password. Yeah, I do know it. All right, so we are going to get in here to the live class right now. We have with Mark Putrino. It looks like the class for now is levels. So let's go ahead and get this started. Any questions, put it in the chat. Again, this is Mark Putrino live, but he's live in the school. He's not able to hear us or see what we're talking about. He might be here later. Maybe.
Nah, I don't know. Not seeing much there. All right. What else is in the sector? T-Mobile, Facebook, Activision, Blizzard. That got taken over, right? Why is that still even trading? Yeah, so that's a takeover. So we don't, the odds are that that's probably not going to move. All right. And then I guess Comcast. Nah, I don't know. Not really seeing much there. All right. So think about that, right? So we got telephone for if XLY turns, if, notice I'm saying the word if, because I'm not guaranteeing it. I'm sorry, did I say XLY? I meant XLC. If XLC turns, there could be some good ways to play this. And one of them could be a potential breakout here for AT&T. You could call this, you could call this whatever pattern you want to call it. You could say, oh, maybe it's a cup and a handle. You could say maybe it's a double bottom. Doesn't matter. If it looks like we're going to break out, we could get a big move, a decent sized move here. So remember the way that this potentially works, right? A lot of times, people are like, well, how come something makes a big move after it breaks a resistance? Well, the theory is that, say there are sellers that want to sell from say 21 or 22. Well, they see the resistance down at 2075, so they go and they join it. They reduce their sell order price. So when the market gets above that, there's tends to be like an air pocket there. So that's one way we could potentially play it. Another way would be to go back to this Verizon, right? This could be on the verge of a breakout. But instead of breaking support, this would be breaking through support that had, or sorry, instead of breaking through resistance, this would be maybe a break of resistance that had been support. Let's see where this thing found a bottom. And then we got the AVGO for a potential. So these are three potential things for if we reverse. Broadcom. Okay, and then if we don't reverse and we see this XLK continue to, for now it looks like it's holding, but if XLK starts to take out 131, there's a whole slew of ways that we could trade it. And my guess would be your next stop would be down around 125. Whoops. And that's because it was support and resistance. So yeah, so this breaks, next step is 125. So 131 to 125 is whatever percent. But, if that happens, if you start to see this give way, you could just go over to the S triple Qs. Put it this way, if XLK goes from 131 to 125, that's a 5% move. This thing could maybe move 15% higher because it trades 3 times inversely to the Nasdaq 100. Look at this. This looks pretty weak here, right? Next stop here next stop here would be down, I would say probably around 270. So that's 15 points lower than where we are now. All right, so that would be so if Qs was to get down to here, S triple Qs would go up by about 15%. So I guess it's kind of a hurry up and wait type of a game now. We really just got to watch. But fortunately, there's only a few things we need to watch, so that makes our life easier. I closed my long call. Yeah, Apple and Microsoft are going to ultimately drive them because they're just they're such bigger weights. It's a weighted average, right? The S&P is a weighted average. So Microsoft 254. Yeah, my focus would be right here. Like, if there's one thing I'm looking at this afternoon, it's this: how does XLK handle this one important 131 level? It's been support over the last 2 weeks, and it was support back here in May. Let's see. Boris says, "At market seems like there is a positive feedback loop." Yeah, there's definitely they definitely trade in tandem, um, and I think now more so than typical times. All right, so let's see. Brandy asks me, "What about the story on Market Watch here?" All right, let me see. The month-to-month inflation rate, it's on their site today. The CPI's 12-month rate of change is inflated by big jumps in June and October and March. As a result, the 12-month rate of change will remain high regardless of what happens to the CPI over the next couple of months. One illustration is this: even if the CPI had remained unchanged from March to April, the headline for April still would have been 7.9%. This puts the current discussion about inflation in an entirely different light. The month-to-month inflation rate doesn't have to get any lower than it was in April in order for the CPI's rate to fall to 4.1%. I don't know. I think I would disagree with that. No, no. No, that's wrong, Brandy, because it completely ignores the whole supply side of the equation. It's basically saying the CPIs. All right, so we had big jumps in June and October, right? But why did we have big jumps? If you look at the CRB, I mean, it's been a long, slow uptrend. So it sounds to me like whoever wrote that article is a Keynesian, and they're ignoring. Look, there's different reasons why we have inflation, right? But the main reason is that the money supply has grown so much. All right, so they're saying big jumps in October and June. I don't know. How is this a big jump? In June, the CRB went from 208 to 212. In October, it went from 235 to 235. It's like, look at the long-term trend. Look at the long-term trend here. This is due. The main reason why this is happening is because they put too much stimulus in the economy. It really is just that simple. If this whole Build Back Better thing got put through, this would look, instead of it like that, this would look like this. So, that's the thing. The Keynesians, they don't pay attention to the supply side. They just look at the demand side. They think, oh, there's a jump in inflation. Oh, it's got to be because the economy is getting better. They don't even think, oh, it's because there's more money. Think about this whole modern monetary thing, right? They talk about, it's like, if it was right, and if it was right, then why don't they just send a check for $10 million to everyone in the country? You know what I'm saying? Then everyone can be rich. Rodrigo sold S triple Q calls for 54% gains. Mark, should we be more bearish since the market reversed today and touched the open and then sold right back up? Yeah, that seems like a kind of a negative dynamic. Yeah, I would agree with that. I don't think it's huge, but so sometimes the action in the morning and the action in the close, like those first half an hours, can kind of give us insight into where we're going to go for the rest of the day. This whole snap thing feels like a setup. Ew, all right. So when does a company that does not really make any money become so important and drives the market? That's why, like, in general, the media is usually wrong about what they're saying. So that's why we tend to ignore them. I mean, they always look for something. I mean, the bottom line is the market's getting crushed. All right. That's really what's going on. And when things are getting crushed, people start to get panicked. And it's only a matter of time before we start hearing about funds that go under. Like, didn't that whole Melvin Capital, was it? They just liquidated, right? They're the guys that lost all that money on that short of GameStop, allegedly. Um, Yeah, I mean, these are just things that happen in bear markets, and they try to. It's like like if we look at some of these, what I call the garbage stocks, like these stocks that were the big Reddit companies. And the question is not this. The question is not why is Aterian trading for $3. That's not my question. The real question is why was it ever traded for $46? It never deserved to be up there. Maybe $3 is a fair value for the stock. So markets act different at different times. Just like in bull markets, things can get overinflated on the upside. In bear markets, things get overdone on the downside. So, is baby throwing the bathwater? And a lot of it too is you have to understand from the institutional perspective, right? A lot of times your institutional world, your decision is not your own. All right, let me explain. Oh, descending triangle here. Worked out pretty good on this one. Say you're in some big shot hedge fund and you own this stock and you have a client that's got a lot of money invested, and that client calls you up and says, hey, the world's coming to an end. I want my money back. You got to go ahead and sell. Well, the fund might think, hey, now it's time to buy, but they're forced to sell anyway because a lot of it is driven by client redemptions. So as clients start to panic, and as we start to get towards the end of the month and people start seeing their monthly returns, and in the pension world, when you're seeing, not only are stocks going down or bonds going down, that's what leads to things like this. And people are seeing, well, stocks aren't good, bonds aren't good. What's good? Oh, commodities. So now the top of the food chain of Wall Street, the pension plans, it's not the hedge funds. The hedge funds manage money for the pension plans. The pension plans are going to start saying, stocks aren't good, bonds aren't good. Let's fire our bond managers. Let's fire our stock managers. Let's put the money with our commodity managers. And that's going to exacerbate inflation. Um, all right, so let's see what Boris has to say. Boris, I think that Snap is inconsequential, but people are scared. Yeah, people are. This is a bear market. People are starting to get afraid. People are starting to lose uh, some real money. So let's just take a look back here at Apple again. Yeah, I mean, it's just like we're just like teetering on the cliff here, man. Just kind of teetering away. So I think, over the next few days we're gonna know, man. Apple's either gonna it looked like it was gonna stage some kind of rebound yesterday, and I think a bunch of you guys caught this on the long side because the day traders would have closed out at the close. Um, but yeah, I mean, we seem to be forming a bottom. And again, just going back to our communication services sector, if this thing turns, then we're going to get some decent upside in maybe AT&T and Verizon. YouTube warned me. I will talk to you tomorrow. The Snap News is showing that ad companies are pulling back from pumping money into social media. Yeah, I mean, I didn't see it, but I guess that makes sense. Look at this. Walmart looks like it could be staging some kind of a reversal here. See, when we talk about our patterns, right? It's like forget the names and all that stuff. Let's just think about what's going on. Who cares if this is a V pattern, a U pattern, a triple Indy pattern, whatever. We just see the red team is in charge, right? These are the sellers. They're aggressive, they're super aggressive, they're selling, they're selling, they're selling. And then what has to happen before a sell-off? When a stock is selling off, what's the first thing that needs to happen before it starts to go higher? Well, it needs to stop going down, right? Sounds kind of silly, but it's true. So we have this massive selling, massive selling. On this day, we went from 136 to 131. Here we went from 127 to 122. Here we went from 123 to 119. And then what happened on this day, May 20th? Well, it stopped moving, it stopped going down. Now it looks like the blue team is kind of back in charge. So the blue team took over. It's like a football team. They push the ball down the field, and the team makes the goal line stand, and then all of a sudden the momentum starts going the other way. So this is a pretty nice move here in Microsoft. It looks Microsoft. It's a pretty nice move here in Walmart. So it looks like maybe there could be a little continuation there. Just like that, XLC is moving higher. Let's see there, Cipriano. Well, I don't know about that. Let's see. Maybe a little bit. Let's see. So anyway, I just think it's a good idea to use these sectors as a way to come up with ideas. And if you see a sector, like this sector, you could say, well, it potentially looks really weak here, right? It's breaking down. It's below this level. If it keeps going lower, it keeps going lower. Then you look for the names within the sectors that are vulnerable, that are more vulnerable than the sector in and of itself. Like for example, if Electronic Arts is in the XLC, right? If XLC starts to break down and really go lower, think about it like this: it's the whole bang for your buck attitude, right? Or idea. This could go from 57 to 55, which is 4%, right? Well, in the same case, Electronic Arts might go from 138, and I don't see any clear support till we get down to around 129. So that's like a 7% move. So we let the sectors tell us look for the ideas. If it looks like this is going to reverse and get back higher, well, then we can start looking at things like AT&T that's in the sector that looks like it's breaking out, and it's actually moved up since we first started talking. Just hold on 1 second. All right, so what are you saying there, Johnny 3? Let's see what's going on in Apple. So you're looking at the 1 minute, I presume. Oh, so you're looking at that, yeah. All right, guys, let me I gotta get going here. But before I go, Johnny 3, yeah, I mean, this to me just looks like someone came in with an aggressive order. Yeah, I think someone came in with an aggressive order and just probably said, sell, I got 50,000 shares for sale, just try to get it done. Maybe they just weren't price sensitive. All right, everybody, I got to get going. I got some meetings I got to get to this afternoon. So thanks, and I will check you all out tomorrow morning.
All right, folks. So that was the class there we had. We only showed you a little bit there from Mark Putrino. The class was levels. Again, we're giving you a sneak peek of the Benzinga Trading School. If you guys do want to give it a shot, it's literally $7 for 7 days. It's cheaper than your Starbucks coffee. It's cheaper than most of the stuff you buy that you really don't need. I promise you that. So give it a shot. These are going to be some really volatile next couple 7 days. I think you guys can see the screen here. Let me go to the video library. I want to show you guys the recording. I do need a quick minute here. I just need to make a quick call, see if maybe we can get Mark Putrino here. 1 second, guys. All right, everybody. I know I've been muted. I was talking with Mark on the phone. I had to get some things settled out there. Ladies and gentlemen, welcome the man of the hour here. Let's go. Let's go. Let's bring him. Mark Putrino, former hedge fund manager there, traded with Steve Cohen, Mario Gabelli. You just got off the school right now. So thanks for being here, giving us some time. Appreciate your expertise here on the matter of, what we could see and really, the charts behind all this stuff, Mark, with the Fed talking in about an hour or something.
Yeah, Rodrigo. Yeah, no problem, man. My pleasure.
Yeah, so we watched a little bit of the live class here. We were watching it live and, so many great things that you do there, right? Trade ideas, education, all that stuff. And I've been getting a lot of calls and emails from people that like, hey, maybe, times are like right now, the volatility is so high, Mark, that some people are just completely like kind of shocked and they're not trading. But I do know that in the trading school, you provide like strategies, not emotions, right? For people to use regardless of what they do, if they're buying, doing options or trading the stock, right?
Yeah, yeah, we cover a lot of different styles. But ironically enough, um, you know, the people, you could have different styles, but the people that fail all kind of fail for the same reasons, and it's that because they don't have the discipline to stick to their style. So, big part of what we talk about is market psychology. That's one of our classes. Um, most new students come into the class, and I ask them like, why? Real simple, like, why have you been losing money? And basically 80% of the time they say, well, I just guess. And if you just guess, you're, you know, pretty much guaranteed you're going to lose money. So, if you want to just guess, go to the casino, maybe get some free drinks or out of it. You're going to lose money, but at least you'll have a good time.
Yeah, no, right. And this is the thing, Mark. Like I know that like when I was trading options, like and I really wanted to, day trade calls and puts, it really was either it was morely like, I'm lucky today, I'm not, win some days, maybe not some days. And really I've never even considered like, hey, maybe this is happening because I really can't read a chart. Like I have not taken any serious consideration. And it's not like a 2-minute YouTube video, Mark. It's not like that, man. Like as a CMT, as a former hedge fund manager, these things you kind of have to go through them and you go through tons of charts. But ever since, I've gotten a lot of the technicals and the charting part with the school, Mark, since we started last year, I'm getting way better entries. I'm getting way better exits. Today, I mean, last time when I was in the school, um, I think I posted it there that I was buying calls on the SQQQ. I ended up making like 180% there. And today, um, I bought SQQQ calls and I made about 48% today. So I mean, the school helps me with so much stuff. And well, actually, here I just want to show everybody here so you guys see like legitimately the contract and everything. 80%, $18,000 SQQQ, $65 call. That was my profit today. So
Bro, you made 18 grand today?
I made this today.
Wow.
And last week, I
Man,
mean,
I know who's getting the bill next time we go out for dinner.
but the thing is, Mark, that the technicals have helped me so much with the stuff because I'm still trading the same way I'm trading. I'm buying calls, I'm buying puts with the SQQQ, triple leveraged, and really, thank you, Mark, for all the stuff, the knowledge, because I know I'm not the only one. Born free, born to be free. There's so many other students that benefit greatly from all the stuff you teach, man. So, big shout out. If you want to go ahead and share your screen and show a couple charts there, Mark, go ahead.
Yeah, sure. Let me just give me 1 second. So this is something I want to focus on. I think people should be looking at. Let's see, where are we here? Let's see.
Yeah, so like I mean, really, Mark,
Can you see it? Do you see the CRB screen?
yeah, we can.
Okay.
It's good
Okay.
though. Yeah.
Yeah, good, because it said I had a communication error, but I guess it's okay. All right. Well, this is, I think, a really interesting thing to talk about here. And we talk about this in the school, and to be perfectly frank, I don't have the answer for it. But this index here, it's the CRB index. That goes back, I think it was called the Commodity Research Bureau a long time ago when it started. Now it's got this fancy name, Thomson Reuters Core Commodity. But anyway, this thing measures, I believe there are 26 various commodities in here. Everything from oil to steel to wheat to gold to nickel. So it's a measure of inflation. All right. It's a benchmark of inflation. And here's the thing. This thing has gone up in the past year by let's see, 1 year. A year ago it was at 203, and now it's at, say, 315. So this thing has gone up by more than 50% in the past year. Okay. At the same time, the CPI the Fed measure of inflation has gone up by 8%. So if you were to go with what the Fed is saying, you would think inflation was here. All right. So, I'm not an economist, but I just don't know how you get, I'm just going to type this in here. Plus, what are they saying? Inflation's 8.5%. How do you get 8.5% to 50%? It's not like they're off by like just a couple minor percentage points here. This is a big difference, right? So I think this shows us that, and I don't know why. I don't know why this is. One of the things that we've been talking in the class is trying to figure out, what's going on here. And part of it is that the CPI measures urban locations. So maybe potentially it's not picking up the fuel costs that people that aren't living in urban locations have to deal with. But anyway, this shows us that inflation is, in my opinion, way worse than expected. And this whole thing with transitory inflation is just, nonsense, because I wrote an article, which I showed the class from a previous place I was at, where I first started talking about inflation back here. All right. This is August of 20. So these are copper prices, right? Look at what happened to the price of copper. It went from 217 to 299 in a matter of months. So, inflation has been around for a long time. It's not some new thing. But here's the thing, man. I think over the next few days, we're going to get some really interesting movement. I don't know which way it's going to go. My suspicion is it's down. And I'm talking about the stock market now. But we can't get too wedded to an idea or married to an idea. We have to remain agnostic and let the market tell us what to do, right? So one level we got to really focus on now is this here. What I have on my screen is the technology sector ETF. It's XLK is the symbol. It follows the technology sector, which is the biggest part of the stock market. You can see way back here in last May, when we had a sell-off, it found support right around the 131 level. Now, people have probably heard the expression markets have memories. That means that sometimes these levels that are important can stay intact for a long time. So look what happened back here in May, right around 131, we found support. Got all the way up here to 176, come selling off again. Right now, we're at this support again. So we're literally sitting right at it, 130.78. You can see how over the last couple of days, it's been a very important level. It's where we're trading right now. So I think, Rodrigo, over the next few days, we are going to know. I think this right here is probably going to tell us,
right,
within the next few days, where the market's going to go in the next few weeks. So we have strategies for if it's going to go higher, and we have strategies for if it's going to lower. I would be pretty surprised to see this. You know what I mean?
Yeah.
I think we're either going to see this or that. So we'll see.
Yeah, these earnings have been pretty nuts, right? But and that's the thing, Mark, because like some people will want to trade a different kind of stock. In my personal preference, I like to trade the same thing. I mean, like the Qs, just leveraged or not. So, but that's the thing, I do appreciate all that stuff because the technicals, Mark, you apply them to every stuff. So let's just say, and I know you go over this stuff with the people at the school, all the students and all that stuff. Do you think, I mean, just let's say hypothetically, right? If Powell increases rates or, a lot or not a lot, what else do you see happening here? Let's just say earnings keep tanking and he keeps hiking rates, overall, because you've been covering this for some time, Mark.
Yeah, the market, this whole sell-off it didn't come as a surprise to us, right? What was going on here at the end of the year was the market was really starting to fall apart. But what we're looking at here or let's just say we're going to look at the S&P 500. We're looking at 500 different stocks here, but the way they're weighted, some stocks have more weight than others. For example, Apple and Microsoft, they're 12% of this. There's 500 stocks and two of them are 1/8 of the index. So what was going on back here in November was the market was really starting to come apart. But because the money was coming out of the stocks that were going down, were going into the big guys like Apple and Microsoft, this masked the behavior. So one of the things we look at, you just mentioned the Qs. This particular index here, or ETF, sorry, covers it's the Qs, but every stock is equal weighted. In other words, Microsoft and Apple don't dominate the market. And look at where this peaked. So right around mid-November is where I believe we started to get bearish. And it was pretty simple. This index of equal weighted stocks was started to go down. Now, as a lot of these stocks went down here and into here, they were flowing into the big names like Microsoft. It's almost a flight to safety. Oh, these stocks aren't working. What works? Oh, Microsoft, Apple. So look at the difference here. The regular Qs, where Apple and Microsoft have the most weight, peaked in December, right? Really basically right at the very end of the year. That's December 28th. But the Qs that have the equal weighted peaked right here a month and a half earlier. Okay, this is where Qs peaked. So this one of the very simple little thing here that we watch. It just all these stocks have equal weights. So this was the sign that the market was really kind of starting to come apart. Markets go down at different times. I should say that sectors go down at different times. The whole market doesn't just crash at once. Back in the NASDAQ bubble, the NASDAQ stocks peaked in March of 2000, but the bank stocks didn't peak until November. So look at this. XLK peak, technology sector peaks in December 28th to be exact. Let's take a look at the consumer staples sector. This didn't peak until April 22nd, and look at where it is now. So by understanding that different parts of the market move at different times and different things drive the market at different times, that allows us to let the market really tell us what to do. We don't want to go in there with a preconceived notion. Oh, Powell's going to say this, and then this is going to happen, so I'm going to take my position. We want to go in there, and who cares what Powell says? We just want to wait and see what the market reaction to it is. Now, I don't think Powell's going to say anything that could possibly be positive for the market. I think if he came out and said, hey, we're going to raise interest rates 100 basis points, that would be positive. It probably shows some short-term volatility, but I think that would be longer term good. But these guys have been behind the curve, or behind the 8 ball now for 2 years, so I don't see why anything else would change. But I would like to get more insight onto the disparity between what the actual market is saying about what inflation is, the CRB index being up 50%, and the government saying, oh, it's only up 8%. So, I don't know how you do math, Rodrigo, but
with my fingers, right?
I don't know where you learn math, but where I live, a year ago, gas was, I don't know, like $2.50, and now it's $3.50. So I don't know. The way I learned math, that's a hell of a lot more than 8%. So
yeah, chicken has doubled. Look, chicken has gone up in price so much that I stopped eating chicken. Like I only eat fish now. And that's the thing. Like, I mean, the government might tell you one thing and they'll put numbers out there, but people feel, and then right now with the rate hike, there's a lot of people that have reached, like, I talk to thousands of traders here, Mark. I've been for like a year or so here, and people are feeling the pinch of like higher rates with their mortgages and car loans, and high auto defaults that has been coming up. So, and look, you have this thing. Oh, you brought it up. That's awesome. You do this is it Monday or Friday that you do that?
I try to get it out for Monday morning. This is just
Okay.
our weekly newsletter here for the class, and this is one of the things why I talked about why are there such a discrepancy. I don't know why. I don't know why. But one thing that I will say is this: Robert Gordon is a great financial historian, and back in the late 90s, the government did mess with the CPI number because they wanted to keep it artificially low. So that back there, that's PAL. So this is what he said. Our study of appliance equality shows that most quality improvements, particularly improvements of energy efficiency, were missed by government price indices, so that consumer welfare benefits of improving appliance quality were admitted from the GDP. So this famous historian, economist, who's written a lot of great books about Wall Street, said that there's something going on there, and I don't really even know what it is. It has, believe it or not, it has something to do with like how televisions, high def televisions, have gotten so much cheaper, but somehow that is altering the that's somehow altering the data. Now, I don't, I'm not an economist, so that's what was happening back then. But that just has kind of a funny aside. We talk about Ponzi, because it's a big Ponzi scheme, and how Ponzi was this like really interesting guy who, you know, at the end of his life, let's just say he ended up in jail. Um, but yeah, it's kind of just like a lighthearted newsletter. We like to
Pretty
hey,
educational though. It's pretty educational, I'd say, right? Too.
dude, I thought it was going to take me 10 minutes to write about Ponzi, and I spent like all Sunday doing this because, like this dude came over. It's so funny. It's like, he comes over, he gets a job as a waiter, but then he gets firing for shortchanging customers. He ends up in prison. He writes his mother a letter saying he's a special assistant. Then he got sent to jail for illegally smuggling Italians into the country. Then he figured out this arbitrage where they had these things where basically you could buy stamps in one country and use them to pay for stamps in another country. And because of inflation, the values got out of whack with the stamps. So he was able to form an arbitrage, but he ended up having this massive thing where 75% of the Boston police force was invested in the scam. He lived in this mansion. He had dozens of people working for him. But then, of course, it all came apart. Then he ended up down in Florida trying to sell land in the Florida land boom back in the 20s. So he got busted for that somehow. He ended up in jail again. Then he hired a guy who was to be his press agent. And the guy is the guy who ended up exposes him, because he figured out, how crooked it as he was. But anyway, that came in lieu of some other, stuff that was going on in the market. But yeah, it's we try to keep it entertaining. So, the three things that I'm thinking about this week in the market are, we have these things that we just looked at, a bunch of them. We have these stocks and sectors sitting on these important levels. We have this question of what's going on. Notice CPI or CRB or CPY. And then we have, there's been some recent trading schools have been exposed or had to pay some fees for illegally advertising. So we talk about stuff like that's going on. So I would say, the class is really based on technical trading, right? But we cover other things too. Like look here. So this was I put this out Sunday night. 397 and 385 are the levels to watch for SPY. If we look at SPY or the SPY, whoops. Look at where yesterday's high trade was. High trade 397. So right there, it's within a point. Today's low trade 386. So it's within a point. So the idea of this newsletter is to just kind of point out like what to watch this week. There's spiking, and that shows why these levels are important. It's because we go back to here and here. This is what we were just looking at, this tech sector sitting on that really precise level. So it's not really a trading letter of trading advice or trading ideas. It's more of like the themes. Like we look at these themes that are going on in the market, and then from the themes, it's like, how do you make the money from the themes? How do you make money from inflation? Like, for example, inflation's higher than we think. A bunch of the students bought this for a long-term investment, not for a trade, but this DBC. This thing tracks inflation. It's an ETF that tracks inflation. Since the beginning of the year, it's gone from 20 to 28. It's up 40%, right? Or is that 20%? Anyway, it's up a lot. It's up a lot, right? It's up 40% year to date. It's gone from 20 to 28. So, while everyone's watching the stock market melt down, you could have just parked yourself into this ETF and you're up 40% year to date. And, if inflation looks like it's going to keep moving higher, and at this point, it looks like it probably will, then, this is going to keep trending higher too. It spiked up a little bit because of what was going on in Ukraine. But, as you can see, it's kind of calmed down a little, but it's maintained that steady uptrend. So as long as inflation goes up, here's another inflation thing. How is this up? How do you get 40% from January to the end of May and tell me that that's up 8% in a year? That math just doesn't add up to me either. So a big theme of the class is having like agnostic ideas, but coming into the market and going through the market and letting the market tell us what to do. Like, I don't know if this is redundant because I don't know who was watching during the class or not, but for instance, we're looking at this communication services sector, right? XLC. So this thing has been beaten up pretty good, right? It's overbought. It's oversold. But things that are oversold, they could keep going down. So now what's going to happen here? Well, it's going to reverse or it's going to keep going lower. It'll tell us. We'll just have to watch. If it looks like it's going to reverse, if it looks like it's going to get back above this line, well, there's some names within this communication services sector that look pretty tempting. For example, if this goes from 56 to say 58, well, look at AT&T. This thing looks like it could be on the verge of a breakout. Oh, now it really is starting to move higher, right? So this could be a play on the long side. Now, let's say XLC doesn't look like it's going to break over and it's going to keep going lower. Well, then we look within the sector for names for potential ideas on the short side or for people that like to buy the options. So look at Electronic Arts. This looks very overbought, and it also is at resistance. One of the principles of markets is things that are overbought that get to resistance tend to sell off. So right there, just by looking at a sector, we came up with two trading ideas. Sector breaks down, we could probably get our alpha or best bang for our buck here. Sector reverses and goes higher, then we probably can get best bang for our buck here. So it's a big part of it, Rodrigo, is that you have to let the market tell you what to do. A big part of it is not forcing things. A big part of success is kind of sitting on the sidelines and having patience and knowing when to act and waiting for opportunities. And when they come along, that's when you jump in. And right now, this is perfectly one of those moments, right? Because XLK is going one way or the other over the next few days. I don't know which way, but like I said, the odds are greater that it's going to do that or that than that.
Yeah, and I think that's a great way to look at it, Mark, because for some reason, I guess traders, they do have, and I don't know why, but it's always like you should be trading the whole day, in and out, like every second of the day. Like today, I was only trading for like 2-3 hours. I sold it, and I'm like, okay, I'm done with the market for the day, and that's it, right? You don't have to be in it every single minute, right?
No, and that's one of the big mistakes people make. And this is one of the books on our I guess quasi official, not really official, but there's a few books I recommend, and I don't recommend too many, but this book is written, supposedly it's about a guy named Jesse Livermore, who was a great trader, equivalent of a hedge fund manager back in the 20s. And some of the advice that he gives, I think is really good. You know, it's advice that's timeless, right? So this is 100 years ago, and some of this advice is just as perfect as it could be applied today. So let's just, like this, another lesson I learned early is that there is nothing new on Wall Street. There can't be, because speculation is old as the hills. Whatever happens in the market today has happened before and will happen again. I've never forgotten that. And that's because human nature doesn't change, right? Just like we've had panics in the 20s and in the 50s and in the 60s and in the 70s and in the 2000s, and we're maybe even going into a panic now. This is another one. It takes a man a long time to learn all the lessons of his mistakes. There are two sides to the market, but there is only, let's see, they say there are two sides to the market, but there is only one side to the market. It's not the bull side or the bear side, but the right side. It took me longer to get that general principle fixed firmly in my mind than most of the technical phases. But this quote addresses just what we're talking about. Some people feel like they need to be addicted to, or always be in front of the screen, always doing something. I think if you have a period of losses, it's okay to take a few days off, even if you have a period of gains. This, I think, is a really incredible statement. After spending many years on Wall Street and after making losses of millions, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting. Got that? In other words, sitting on the sidelines, waiting for the opportunity to come. My sitting tight. It is no trick at all to be right in the market. You will always find lots of early bulls and bull markets and early bears and bear markets. I've known men who, when were right at exactly the right time, began buying or selling. So the bottom line is, what he's basically saying here is that waiting for the opportunity to come along is the secret. If you go into the market and you say, man, XLK is going to go down today, I'm going to go in and I'm going to go short all the technology stocks. Well, that's not waiting. What the book was alluding to is sitting on the sidelines saying, all right, well, let's wait for this market, tell me which way it's going to go. If it starts to break 131, then it's telling me it's going to go down. That's when we're going to sit on the sidelines. A couple of the students said that they had their best trading days ever. And that was in this movement down here. Let me just think. Yeah, okay. Now, the reason why, I think they each bought the S triple Qs, and I think they each bought options on them. One guy, I said he made 10 times his money. I don't doubt. I mean, I have no way of verifying that or anything. But if you bought the right options, it is possible. So anyway, notice this. So Microsoft, right around here, May 9th, May 10th, starts to take out this this support. At the same time, coincidentally, we have Apple right here starting to take out this. So when you have the two biggest stocks in the market telling you that they're breaking support, it's not surprising we had a big move lower. So we was sitting on the sidelines, sitting tight, waiting for the market to tell you when to act and getting in. And I think now we're at one of those sideline situations again here, Rodrigo, where, I don't know what's going to happen, but I have a feeling over the next, maybe not today, maybe not tomorrow, but maybe over the next week or two, I think the action that we see right here in this tech sector is probably going to tell us where we're going to go for the next, the action here will set the trend maybe for the next month or two. Like
that's going to be interesting. I want to give a quick shout out here, Mark, to Darcy. Welcome to the trading school trial. Most recent sign up member there. Let's go.
Thank you, Darcy.
So basically, guys, what it is that we're doing it just for today here. $7 for 7 days in the Benzinga trading school, so that you can spend all this time with Mark just how we are right now. That's what Mark is doing in the school. Live classes. He has a live room where he posts setups, entries, and exits. And you have a community chat room. You have amazing people like Born to Be Free is in the chat. I love that guy. There's so many great students out there that I've told you since we started this. It's just great. But if you just want to do the 7 days for $7, do it, because the volatility we're going to have these days, I'm telling you, you don't want to be doing it alone. At least get in there, talk to the people, and see if it's a community that you could see yourself growing as a trader, right, Mark?
Yeah, yeah, we have a lot of different styles, a lot of different experience levels, but there's seems to be some good camaraderie and some good thought exchange. And a lot of the best ideas come from the students. They don't come from me, because everyone looks at different things. Everyone has a different eye. Everyone, different people work in different sectors. So some people we can get ideas from just out of their sectors. Like for example, back in, I think it was January, when we were starting to talk about inflation, one of the guys was like, look at the price of butter. And I never even knew that butter traded, that there are futures on butters, but that was like right here. So this was a huge sign of inflation, just from December 31st to January 31st. The price of butter, however this is calculated, went from 206 to 256. So that's like that's a huge move. So yeah, so I'm not saying like we all went out to the store and we stocked up on butter, now we can sell it for more. But this kind of just played into this whole thing that we're seeing, like, oh, well, they're saying inflation is transitory. Well, if inflation is transitory, then why did the price of butter go from, 138, or why did the price of butter go from 147 to 207 in a year if inflation is transitory? So like, I never even knew that there were butter futures. There's also milk futures, which I never knew. Now look at this, right? I mean, the price of these milk futures, and now we have the baby food or the baby formula shortage, but the price of milk went from 1544 to 18. So how do you say inflation is transitory? And now they look at this year, milk has gone from 1846 to 25. So that's like a whatever 30% move higher, I mean, this is like pretty serious stuff. So it is what it is, though. There's nothing we can do to control it other than think about how in the market we can make money from it, or at the very least hedge ourselves. And one of the things, like I keep going back to, is this whole commodities based fund, something like this is going to follow the price of commodities. So commodities keep going higher, this is going to keep going higher. A lot of what we do is talk about how to trade commodities markets with ETFs. Like, a lot of the students have done really well trading natural gas back and forth with natural gas ETFs, right? Rodrigo, we got.
Yeah, and I don't know if you guys remember, but some of the OG students might remember. Mark called. I remember. I think it was August or there when you called the bottom on oil at 60, and I made some pretty good profit buying calls on the oil companies, not on the ETF really, but I just the stocks move a little bit more, But that was a great call, man. And I'll tell you, like, there are certain calls that I can recall from certain people that I'm like, that was a great call. And and it's even better when all the students make money out of it. We hadn't even started the school. We had like pre-enrollees at that point, Mark.
Yeah, that was a pretty easy call. That was right here. And that was because oil got really oversold, and it just ended up at a level that was support before. So oversold, got to support. Pretty simple concept, right? Markets that are oversold that get to support tend to bounce. So there was support back here around 62.50 in May. This is what Rodrigo's talking about. We had this I think it was a weekend boot camp. So it was either Saturday, the 21st, or Sunday, the 22nd. But oil had gotten down to there. Now look what's pretty amazing. This is the whole day after Thanksgiving with the new virus that came around, the Omicron. Look at this particular day here, December 2nd. Oil gets really oversold. Where does it find support? Right around 62.50, 62.46, 62.43 to be exact. So we're talking about this market of trillions of dollars, and look how precise some of these levels can be. And, in the institutional trading world where I come from, this is what we do. We look for, what price levels are important, what's going on. We don't think about things like, like no one in the institutional world talks about Elliott waves or Gann theory or Fibonacci retracements. We talk about what price levels are important, and we talk about what a stock's what the momentum is something overbought or oversold. We talk about the trends. Think about it. If something is trending lower and it gets oversold, that every stock has like a average or typical trading range. If a stock is or a market or an ETF or whatever is beaten down below that, we call that oversold. Now, why do we care about that? Well, things that are oversold tend to reverse. They tend to reverse. They tend to revert to the average. That's especially the case if they get to support. So oversold at support reverses. Oversold. This indicator, this oscillator down here shows you overbought and oversold conditions. So oversold at support, we bounce. Oversold at support, we bounce. It doesn't need to be that complicated. Like Wall Street likes to make things seem more complicated than they actually need to be because, well, there's a few reasons. One, I think they like to charge more money. Two, I think there's a lot of people out there that might think they know what they're doing, but they don't. There's also people, as we've seen over the last few weeks, that are actually pure swindlers that, publish false information about how good they are and they're not. Yeah, so this whole school is kind of the philosophy of the school is based on really what goes on at the morning meeting in the hedge fund world. Like when we would get together for an hour or two in the morning, this is what we would talk about, stuff like this.
Right, and that's the thing because there's a lot of, like you say, there's a lot of gurus out there, a lot of TikTok kids and things like that out there, and look, it's very easy to get sidetracked with all that stuff, right? You don't know, you're new, you might get into a pump and dump chat room, you're talking to a fake account, bot or something, and I just really think it's a great environment. What you do here, Mark, you teach, you help students make money. That's the best of both, right? And even though it's called the trading school, I mean, you still do provide setups and things like that, and you go over stocks from the students, right?
Yeah, we talk about economics and pretty much anything that could affect the market. We go through, like, we went through the Walmart numbers just to see why they were so bad, because they gave us, signs of inflation.
So fundamentals too, right? So you go into the balance sheets with them too as well.
Yeah. Some students want to learn about how to read earnings statements and so forth. And then, the main focus is the trading, but when a company like Walmart comes along and reports earnings, you can really, you can, just by spending an hour or two, it doesn't need to be like a big project. Just by spending an hour or two, just kind of glancing through the earnings, you can see, oh, their costs are going up. Well, why are their costs going up? Well, because the fuel is going up, because labor is going up. So, by going through the earnings of some of the bellwethers, it could give us themes that translate into the market and manifest themselves as trading ideas. It's like improv. It's like improv, kind of like it's improvisational, or it's really just a matter of letting the market tell us what to do.
It's a much better approach than, let's say, for example, some people that might be guessing, or because it does give you a better sense, right? If you could be a trader, you could be, because you do have different types of traders in the school. That's why it can sound a little bit confusing, guys, but it really is because Mark is showing you guys like the fundamentals. It's like when you build a building, like the foundation, you need it for everything that you're going to trade, right?
Yeah, yeah. Yeah, so yeah, different styles, different experience levels. We have options traders, crypto traders. Um, but actually, Rodrigo, I have a 2 o'clock meeting I need to get to, so I got 4 more minutes. Um, so I will say this: we're going to get a move, I think, imminently. And when I say imminently, I don't mean in the next like 5 minutes, but I mean over the next few days. I think the action here in this tech sector is going to tell us a lot. Just like it told us this, I could have said the same thing a month ago. The action here is going to tell us a lot, and it started to break down. So we start to break down. I think we could expect some more, another week or two going lower. We hold and we reverse. Maybe we spend a week or two going higher. But we got to let the market tell us what to do. We can't just guess.
Right. No, absolutely. Well, Mark, I appreciate you being here. I know that you're going to be there in the school, and there's a lot that's going to be happening there. You're there Monday to Friday. Again, guys, if you have questions, we're going to put the contact there, or just ask them in the chat. Um, but yeah, Mark, I'm going to stay here. If you do have to pop out, just really quick, showing them the school. I might show them a quick recording, a little bit of the price action in Pro, Benzinga Pro, which is part of the school that I love. So, do you have any closing remarks here, Mark?
Yeah, I think I'd like to see y'all tomorrow morning, because I think it's always going to be a good time to join the school, but now is a better time because we're literally going through historic times here. We have the worst bond market of 40 years. We have the worst. I think someone said Walmart is the biggest down day it had since 1987. We have inflation for the first time in 40 years. So there's a lot of scary things going on, and there's a lot of moving parts, but these moving parts is where we make our money. This is not like a lazy, boring, day in the summertime where nothing's going to happen. There's going to be a lot of moving parts, and as traders, that's where we can make our money. I mean, think about it. Some of the students said that they had their best days ever last week, and the market's really been getting knocked apart.
Right. No, definitely. Well, I'll see you in the school there, Mark. I want to just so you guys know, like Mark was not even supposed to be here today. Like he wasn't scheduled. He came in here as a courtesy because he was in the middle of the school, and that just goes to show that Mark really wants to come out here and help you guys out here through these times, right, Mark?
Yeah, I have to force myself away sometimes, because if not, I could just sit here and stare at charts like till like 5 in the morning. But my kids and my wife let me hear about it. It's my other job. All
Let's go.
All right, guys. All right, thanks a lot, everyone. Hope to see you tomorrow. And thanks a lot, Rodrigo. I'll talk to you soon.
Yeah. All right,
bro.
man. I'll see you there.
Later.
All right, folks. So that was Mark Putrino, former hedge fund manager there. He traded with Steve Cohen, Mario Gabelli. Those are two multi-billionaires. If you don't know them, you should look them up there. Born to be free, man. Good to see you there. Rajesh, I see your question, brother. Is the class daily? Yes, it is daily. I can show you here really quick here. 1 second. So if you go to the home page, right, this is where you're going to see your layout. So Wednesday, Thursday, Friday, Saturday, well, no Saturday, no classes Saturday. So Monday, Tuesday, Wednesday, right? So Monday to Friday, you do have the classes, and you can see that Wednesday trends, right? Thursday, you have momentum on the 26th. So you see all the dates and schedule. You can set up that way. Whenever the class is live, click on this thing where it says live. Right now, there's no class, so because he just finished. He finished at 1 p.m. and then as soon as he finished, he was kind enough to come here and just talk with you guys here for a bit. So this is where you would go. The class would be streaming here live once it would be there. Then if you do want the recording, you just click on video library on the top, again, I really think everybody should take this class. I don't care if you're a plumber. I don't care if you're trying to get into trading. It could be whatever you like, but you should know how to read a chart and trade because it's just so quick and easy. Like for you to get into this, it's a skill set that you're always gonna have, and it's a skill set that it doesn't matter, if your office is closed or shut down or not. The market's gonna be open there, right? So um, it's just a good skill to have. I really think it's important to know that, right? Especially if you plan on retiring and you want to do your own trading and all that stuff. It's good to get this early, right? Or at any point. So you do have all the classes, all the recordings there. You have Q&A sessions in, philosophy levels, investment psychology. You're not just learning about reading charts. You're learning about the economy, financial statements, how to look at a company, how to analyze an acquisition. Like we're analyzing things live as they happen. So obviously I can't predict what's going to happen tomorrow and what they're going to be analyzing, but I'll tell you when something happens in the market, the students are active, the students are asking questions. These are some students there that I've met personally. They came to Vegas for a conference to meet Mark Putrino. I was lucky enough to meet some of them. You know, they have fire, right? The students, the people in the trading school, they're fired up. They really want this, right? They're all about learning. They're all about making money. They're so passionate about it. I'm telling you, like it's a mutual thing, right? And they love Benzinga, and Benzinga loves them, right? So, Nav, yes, Mark is amazing. If you want to see Mark every day, you can look at all the recordings we have from all the classes. It's great to keep drilling down on these things, right? It's like you really don't expect to become an accountant by taking, one chapter from one book and then, consider yourself set, right? Just because you were able to understand chapter one. It's really important to get the whole big picture. Michael Anthony, will this work for Canadian traders? Yes, it does, brother. Yes, it does. Anybody in the world can join. We do have an international community. I've signed up people from Cambodia, from Nigeria, from Japan, Korea, everywhere, Canada. Um, Manuel, it does not cover options, but depending on what kind of level of options you're trying to learn, reach out. I can maybe see maybe if there's what makes sense. But a lot of people trade options and trade the school. Ultimately they just want the levels. They want the actual levels to trade around. That's what I do like. Edwin, I don't remember, but we can ask Mark next time. All right, guys. So this is where you find the recordings, right? We can move on past that. We're all on the same page. This is one of my favorite classes, the investment psychology. It's just pretty in depth, really. And I don't think anybody else does cover this sort of stuff like Mark. And it applies to so many things. Like, it applies to so many things, like not just you as a trader, but overall in the market. And that's really interesting. So very important class, right? If you're trying to learn technicals, if you're trying to learn that sort of stuff, here's what I think you should do. Focus on certain classes, right? Trends, levels, introduction. Okay. What's the other one? Market principles, analysis, and sentiment. I mean, patterns. All these classes are important, but that's the thing. Like, and I'll tell you, the people that have been really successful in the school, I asked them, what do you do? Why, like, is there a particular way that you use the school? Do you watch the recordings or do you go live? And it doesn't necessarily have to be that you go live, but as long as you're able to be in at least one or two classes a week, one or two classes, three classes, let's say, you're gonna see improvement. Obviously, I'd hope that you pay attention and have a notebook or something, so you don't just keep this all in the air, right? This is not like gambling rules. It's not like lucky roulette. These are things you should write down and really learn, right? It's gonna make you a smarter individual, a smarter trader. So these are the recordings, right? Let's see, at the top, again, if you do want to join the community, immerse yourself even more, get to talk with our amazing students there and instructor, mentor, best friend, Mark Putrino. This is what you have here, right? So on the left side, I'm going to go over each of these chat rooms and I'll tell you what each one is for. The bottom one is for all the students, trade ideas. They're posting their research. My friend Cypher is there. What's going on? He's a real OG student. I don't think he's watching this, but I'll tell you, man, there's a lot of traders that have come in and they've improved so much. And obviously I can't remember everybody because I've talked to thousands of them here, but there are several that, that do stand out, that do put in the work and are out there helping the new traders, the new members. I see that a lot from people that have done well with the chat room. And I'll tell you, look, if I join a chat room or a school and I get, a pretty big return, like I don't mind helping out too, right? I mean, it's all part of the community, right? Because this is really what we do. We all help each other out. Um, Rajesh, no, it's not like we don't have any chapters or nothing like that on options, but feel free to reach out and maybe I can, do something there for you. Um, okay, so this chat room is the student trade ideas chat room. So let's see, for example, Cypher posted something here. I'm just going to read it really quick so that you can see the kind of post that we get from the students in the chat room. It's a great chat room too. Like the students that we have there, I know are doing very, very well. And it's great to have that additional community activity out there. So Cypher DMG says Costco is no man's land. Based on today, we'll either bounce or go to 385 possibly, and the levels are more like zones, but you can see what I mean. I think the first level could go up a tad. That's not my point. Trading, okay. All right, so then he posts a nice little chart there, right? So, and that's great, right? So now the cool thing is that, we have Benzinga Pro, so we can literally just, whatever it was that we got there, Costco, we can just pull it up there. I do have some indicators. I do have the 50, the 100, and the 200. Of course, you don't need to have them. You could just remove them, right? Up to you. I do have an RSI in the bottom. You don't have to have that. I put it there because I use it. So you can change it, right? You can see Costco has earnings in 2 days from now. So this is just so you know, all the stuff that you see here on the top. Sometimes you'll see like whim, why is it moving? That is like an entire people, like amazing, hardworking individuals. You got Randy, you got so much people that are there that just work really hard to give you the stuff. Like these people are scanning the markets every second. And it's like, oh, this stock is moving, such and such news. And they put it there so that you don't have to go in and try to look for it. It saves you time. So you can do your charting here, all that sort of stuff. You can check short interest. This actually, I would use it a lot if you can. It costs us a lot of money to give you this sort of data. Use it, so it's part of your pro subscription, but you get it for free at the trading school. $7 for 7 days. You can't get any more cheaper than that. Like, there's just no way, so all right, so that's where you can pretty much check out charts. Back to the school, right? So you can see everybody sharing research, trade ideas, all that sort of stuff. Rajesh, about Mark, ask whether Mark's, yeah, so they're stocks, but some people trade options. Like in my case, all I need is Mark to give me the level. And then from there, I'll pick my option that I want to trade based on my risk. Like today, the trade that I showed you that I made like 18K, I picked that contract and it was like $7, $8 out of the money. It was a high risk, you could say, trade. So that's my personal risk. That's how I trade. And everybody's different. So people might want to trade the contracts from next month or whatever. But that was just my personal trade. And I made it mostly based from a lot of the sentiment and chart readings, right? That I've learned to apply from Mark in the charts and also going to the school. The school is 7 to 9 a.m. Eastern. We open at 9 a.m. I'm always there in the school. I'll tell you that. Like the market opens at 9:30. I'm there in the school throughout the whole class as a student. Okay. Listening to Mark, listening to what they're going over, engaging. The community there is fabulous. They're always helping each other out. You just have to try it and you'll see it. It's just not something that's out there really. So student trade ideas is where the community comes together, shares research, helps each other out, that sort of stuff. You have a question about your broker, you have a question about trade, you have a simple question that doesn't require Mark to answer a question. Maybe, hey, you could actually just come into this chat room for that. Student plan project chat, student plan project chat. Well, what do we have here? So it looks like some of the students here, I think I'm understanding this a little bit better now, but some of the students requested this chat room. It's my understanding that they're trying to build a trading system or something like that. Born to be free, Cypher, if anybody can correct me on this, let me know. So it looks like they created some sort of finalized trading plan. This is really sweet and nice, man. It's really good that you guys help each other out. You go to this level, macro trend economic. Oh man, this is great, dude. Like everybody should come in here. We have so many resources, guys, in there. It's crazy. Like I need to spend more time in this, but got to work here too. So, all right, questions for Mark. This is another chat room that you have basically to ask Mark any question that you want. This means that if you are not able to make the live Q&A sessions that we have Monday to Friday, you always have this chat room available so that you can actually pop in here, ask your question, just like Born to Be Free does, or Led Z, right? Stephen Barrett. What up, Stephen? How are you doing? Pimpin' Profits. There's so many great people here, students. I know it's just, I mean, I'll tell you, man, there's a great community in there. So then you have Mark's trade ideas, right? This is one of my favorite chat rooms. I'll tell you that because I do get trades and setups from Mark. All right. I don't know if you guys can see that. It's Kimberly Clark. It's like 140. I mean, I think he called this at 137. So, I mean, I just pulled up a random one. So basically on that, do you guys see that? I don't know if you guys see that. Kimberly Clark, gap down, question mark, right? I just pulled up one there. So it was at 137, something like that. So if you know how to trade calls and puts, in this case, if you'd be able to buy some puts on that on KMB when it was trading at around 137, which is for all this period here, all this box. Let me find a way to draw this. All right. So within that box with like that blue thing, you could have bought puts at any point. And I mean, you know the rest of the story, right? So you can use this chat room for education. You can use this chat room to participate, be part of the community, right? To belong, actually feel like you belong somewhere. Like this is the house of retail traders. This is what we do. It's our niche. It's what, it's who we are. It's what we're here for. So if you do want to be part of that, it's the best community, best international community for traders that want to learn and make profit while they do, or just be part of the gang and make money as they hang out, right? You can do that with us, right? We more than welcome you to come join this community, be part of our team, join our traders, our group of traders, because the better, the more we are, the better. We have people from all over the world and everybody helps each other out. So that's the chat room for Mark's trade ideas. Then you have general discussions. Mark is posting some stuff here. You'll see so much information here. That's great. It's great to just immerse yourself in this. Then you have this other chat room, community support, class files. If you do want to quiz yourself, if you do want to take quizzes, we do have those available for everybody. So you can come in there, and go chapter 1, 2, 3, 4, 5, all the chapters, test yourself, quiz yourself. And if you have questions, and you go to the live Q&As, right? Or you go to that chat room that is called Questions for Mark. So the other thing, you have the general discussions tab. Of course, feel free to pop in there anytime. And all right, so that kind of covers the majority of the school, how it works. The schedule is Monday to Friday, 7 to 9 a.m. Eastern. And then you meet again. That's Monday to Thursday, and Friday you meet from 7 to 9 a.m. Eastern, right? Next thing you have is Pro, right? I mean, this comes with everything that you're looking at. I don't know when this guy is gonna talk, but I just want to look at the charts and maybe see if I can make a trade. Maybe not for today, but tomorrow. So I'm not gonna buy anything today. I'm not gonna do anything today until whatever happens. And then after what happens tomorrow, we'll see. Maybe tomorrow. So I don't know. I thought he was going to talk at 2 p.m. This guy's late or something or what? Joseph Bayless, what if we want to go longer in the class? So you can always do that, man. Today, Mark did go like an extra 15 minutes today. But he would have stayed longer if he wouldn't have had to come here to the session, which we stayed here for another hour. So like I had to call him and kind of like, convince him, see if he wanted to come here for a little while, because he's been there in the school all day. He's giving you guys trade ideas, education, teaching, talking to hundreds of students, but but he'll do it for the team definitely. And so I'm waiting here. I don't know if he's already there. He's already talking, but basically in pro, you can literally look up your charts live. So this is something that you might want to do if you're, trying to make a trade and trying to trade around an event or anything like that. Again, included in the trading school. If you want to try it, $7 for 7 days. It can't get cheaper than that. It just can't. So I'm going to post that link there. If you have questions, folks, and we can see some of the price action here. I'm going to try to see when this thing starts or whatever. Yeah, because I thought it was 2 p.m., but if it's later, I mean, it's fine. All right, guys. So I posted the link there. If you do want to give the trading school a shot, you'll be there with Mark. The schedule is in the description on the YouTube thing. And not only can you be there with Mark, but you can also trade with him, right? And meet the community, be part of that, all that sort of stuff. If you have questions, put them in the chat or email. It's fine, whichever way. And just need a quick minute here so I can send these out. It's going to be interesting to see if this can break below that level at 39. See if maybe buy some puts there. Just for a quick trade, maybe. If it breaks hard. So yeah, I mean, as you can see, you can pretty much flip through charts here pretty quickly. I was just going over a couple of charts here. I wanted to take the temperature here of the market, see if, maybe it's worth taking another trade out there. Look at Google down 5%. Almost 6%. Where's Amazon? Where's Tesla? Oh, yeah, this might bring down ARK. If this falls, this might bring down ARK. It's like the biggest holding there. Yes, guys. So basically, you can pretty much do all this sort of charting in your pro. Obviously, don't forget you do have the school. You have all the students there. The great trade ideas from Mark, all that stuff. I would use pro really as an enhancer to the school so that you can actually learn how to use it and do things like that. You have amazing tools there. Like today, I was looking at what earnings I could trade. Right, I just wanted to make maybe a couple earning trades, some lotto tickets, something like that. So I went in here, I looked up earnings. This is the calendars. The calendar, you open it on the left side where it says calendar. And what I do is that I filter this by my watch. I have several watch lists here, but you can just let it ride like by itself, no filter, and just get all the earnings for today. So today's the 24th. We do have earnings today. So let's see what we can find. And you can filter it here by dates. All right. Today we just picked the 24th. Now, how can I filter this? It's on the 24th. So how about I put revenue? Whatever has the biggest expectation. So Best Buy has some, I think these guys already reported. BBY. Did they already report it? They already did. Nothing happened. See those calls, just lost money on both sides. AutoZone before market open. Oh, these guys are ripping. Looks like they're doing good right now. It's up 4%. Yeah, guys. I mean, I think that look, if you do want to do this every day with Mark, I mean, I would just pop in there for these 7 days. Really, it's gonna be some crazy 7 days. I'll tell you that. Like crazy enough for me to make that trade in the morning, get out, and just wait for the next day, be as crazy or even crazier, right? But um, so AutoZone seems like they put out some good earnings. Let's NetEase. What is this? I think, yeah, man. I wanted to short this one, but it didn't even move much. So let's see what else we have. So I mean, you can see all the earnings here that are out. Let's see a couple stocks maybe that we might know. Diana Shipping. Intuit. Okay, so this is the one. This is the one that I've been thinking about all this time. This one and Nordstrom. So I wanted to buy puts on it. I'm not gonna do it, but this is something that just crossed my mind. Um, because of software. Software is gonna. I don't think software is gonna do well. And these people are like, I think small business, kind of like Shopify. So I'm just kind of connect the dots there. So I was thinking about buying puts on this at the close on Intuit. It's so that's one earnings that I will be looking at just to see, and it'll be crazy if that tanks like 300. And the options are not even that liquid, so it's. But then I saw some other ones that tanked. They weren't liquid, but they still went up. But all right, then you have Urban Outfitters. I don't know if these guys already reported. Probably will be a bad one, maybe if they follow the trend of their peers. Um, Now this is the other one, Nordstrom, retail, that sort of stuff. Like I'm just trying to go short retail based on what I've seen with earnings, but um, you can really come up with your own strategies and all that stuff, and you can use these earnings to whichever way. Like if you want to check out earnings, right? Like right now, it's so important to see what's happening with companies and their earnings. Literally, get in here and just check those earnings every day and be like, okay, this one missed. Okay, this one is doing well. Oh, look at that one; it's doing bad, right? And then you can kind of get a better understanding, right, of peers and such. This calendar, this whole calendar app, it has so many things. We don't have enough time to go over everything, but that's sort of the stuff. You can use the economic calendar there as well. Conference calls, like we can actually check when this call is supposed to be. So I don't know. A lot of them are talking. They're on a Fed Chair Powell speaks. Is that 5:24? Did he already speak? 5 out of 5. Okay. So United Kingdom. All right. I mean, there's a lot of stuff here. But yeah, guys, you also have, this is the other thing I want to show you. This is the last thing I'm going to put out here, guys. This is the scanners. This is pre-market, aftermarket tool research to scan, right? You can scan pre-market, you can scan aftermarket. I use it in the morning. I have my trading school open. Look, I'll just tell you how it is, man. I wake up every morning, I'm scanning the markets. I have this thing open, the scanner, and I have the school, and I'm there with Mark Putrino from 7 to 9 a.m. just just writing it out, right? Looking at the price action and listening to the class, and the students are talking, that conversation. It just wakes me up a little bit to just have that sense where everybody's up and ready and good to go, right? So I do like that. And then I have this tool open. You can filter this by 5 minutes, 15 minutes, 30 minutes. If you do want to trade pre-market, let's say 5 minutes. So all these moves that come out here are moves that came out in the past 5 minutes, right? Whenever a stock rips higher, the biggest move is going to be within like, a few minutes. So this kind of helps you get that, right? That quick move. You can set it to 30 minutes, 1 hour, or just the whole session. Stocks can go up, back down to support and rip higher. I mean, you shouldn't exclude it, right? So I like to use the session one, but yeah, that's the scanner. You can filter it by the sectors that you want. For example, if you don't want a sector, you can just, highlight all of them except the sector that you don't want to see. Say I don't want to do energy. I just click everything except energy, right? So you can do all that, filter it however you want, filter by market cap and price. I do this to save time and maybe not like market cap. I want to get all the penny stocks out of, like sub penny, that sort of stuff out of my face and out of my scanner. I want space for the other stuff. So, and 2 billion is not that I'm getting all the huge companies, but I feel that I'm excluding enough where I can get rid of these wacky biotechs and crazy stuff, and just get a little bit more focused on what I want. Which I'm okay with risk, but not with that, sub penny biotech kind of stuff. Price, I use it about $10 and above. So every stock that's above $10 that has that criteria will be in the scanner. You can filter this however you want. Sometimes you might do 5, doesn't matter. It's up to you. So yeah, folks, that kind of does it here for the Benzinga Trading School live demo. If you guys do want more information, just reach out. The email is there in the contact. You can call or email. Make sure to join us because we do have a really a good session in the school with Mark live as we do, and a couple trades that are going to be posted out there for Mark. So without further ado, guys, thanks a lot for being here. We'll see you guys next time. Trade safe, trade responsibly, and we'll see you guys in the school.